Hi students, 12th Standard Accountancy, Chapter-5, Admission of a Partner, Exercise Sum number 24. Rajan and Selva are partners sharing profit and losses in the ratio of 3:1. Their balance sheet as on 31st March 2017 is as under. Liability side items are given below: capital account, general reserve, creditors. And asset items are building, furniture, stock, debtors, bills receivable, cash at bank, and profit and losses account. On 1/4/2017, they admit Ganesan as a new partner on the following arrangement. Ganesan brings 10,000 rupees as capital for 1/5 share of profit. Stock and furniture is to be reduced by 10% as a reserve of 5% on the debtors of doubtful debts is to be created. Appreciate building by 20%. Prepare revaluation account, partners capital account, and the balance sheet of the firm after admission. Okay. So from the given information, we are going to prepare the revaluation account, partners capital account, and the balance sheet. Okay. So before we are going to prepare the revaluation account, we need to pass the journal entry from the given adjustment. It is easy to prepare the revaluation account, and also there cannot be made any mistakes. Okay. So to avoid the mistakes, we need to pass the journal entry from the given adjustment. Ganesan brings 10,000 rupees as capital of 1/5 share of profit. What is the journal entry? Ganesan brings cash as a capital. So cash account data to capital account 10,000 rupees. There is no revaluation account, so there is no need to enter the revaluation account. Okay. So stock is to be reduced to 10%. Stock account 20,000 is given in the question on asset side of the balance sheet. So stock 20,000 rupees. From the stock 20,000 rupees, 10% reduced, which means 10/100. After cancel it, you will get 2,000 rupees. So 2,000 rupees stock reduces. Stock is an asset account. So if the stock account reduces, asset account also will be reduced. If the asset account reduces, what is the journal entry? Revaluation account data to stock account 2,000 rupees. Listen here, where is revaluation account? This occurs, it is on debit side. So you go to debit side of the revaluation account and enters to stock account 2,000 rupees. Okay. Then furniture is to be reduced to 10%. Furniture account 1,000 rupees is given in the question on asset side of the balance sheet. Okay. So furniture from the 10,000 rupees, 10% reduced, which means 10/100. After cancel it, you will get 100 rupees. So furniture account 100 rupees reduced. Furniture is an asset account. So if the furniture account reduces, asset account also reduced. If the asset account reduces, what is the journal entry? Revaluation account data to furniture account 100 rupees. Which side revaluation account appears? It is on debit side. So you go to debit side of the revaluation account and you have to write to furniture account 100 rupees. Entered. Then a reserve of 5% on the debtors for doubtful debts is to be created. Doubtful debts 5% on debtors, which means doubtful debts means loss for the firm. Okay. So it appears on debtors is an asset account. So if the asset account losses, it will be reduced. Asset account is to be reduced. So from debtors 16,000 rupees, 5% reduced. So after cancel it, 16,000 into 5/100, you will get 800 rupees. If the debtors account reduces, asset account also reduces. If the asset account reduces, revaluation account is to be debited. So revaluation account data to debtors account 800 rupees, right? So where is revaluation account? Which side? It is on debit side. So you go to debtor side of the revaluation account, you are going to write to debtors account 800 rupees. Okay. Then appreciate building by 20%. Building value is 25,000 given in the question on asset side of the balance sheet. From the 25,000, 20% appreciated. Okay. So building from 25,000, 20% means 5,000 rupees. So building value 5,000 rupees increased. If the building value increases, building account is an asset account. So building account increases, asset account also increases. If the asset account increases, revaluation account is to be credited. Okay, so building account debtor to revaluation account 5,000 rupees, right? So where is revaluation account? Which side revaluation account is appears? It is on credit side. So you go to credit side of the revaluation account. You are going to write by building account 5,000 rupees entered. So all the revaluation account related accounts are entered here. So now we are going to find out the total. So how can you enter the total? Which side we have the higher value, that side we consider as the total. Okay, so accordingly credit side we have the higher value, so 5,000 we consider as the total on credit side. So that total 5,000 rupees also you have to enter it on debit side, the same horizontal line. Now we are going to find out the balancing figure. Okay, how can you find out the balancing figure? If you get the total on credit side, higher value on credit side, you will get the balancing figure on debit side. So for that you have to add the lesser value side. That means 2,000 plus 900, 2,900 rupees. 5, you have to subtract the 2,900 rupees from total 5,000 rupees. You will get the 2,100 rupees. This is the balancing figure. If you get the total on credit side, you will get the profit on revaluation on debit side. Okay. So 2,100 is the profit on revaluation account. The 2,100 rupees profit on revaluation account immediately transfer into the old partners capital account in their old profit sharing ratio. Who are the old partners? Rajan and Selva. Okay, that 2,100 rupees profit, now we are going to distribute to the old partners capital account to their old profit sharing ratio. So their old profit sharing ratio is 3:1. 3 for Rajan and 1 for Selva. Okay. Now we are going to cancel it. 1 4 is 4. 5 4s are 20. Remaining 100. 25 4s are 100. Okay. 525 into 3. 5 3s are 15. Remaining 1. 2 3s are 6 plus 1 7. And 3 5s are 15. So Rajan's capital account we have 1,575 and Selva, now we are going to calculate Selva's profit values. Okay, so 2,000 into 1 by 4, same 525 into 1 is 525. So the revaluation, profit on revaluation immediately transfer to the old partners capital account with their old profit sharing ratio. Now we prepared revaluation account. Okay, let's go to prepare the capital account. What is the format for the capital account? There are two sides of the capital account, debtor side and creditor side. Okay, so debtor side we have the format is particular and respective partners name. Creditor side also partners and particulars and respective partners name. Okay, so we always in capital account we always started with the opening balance of the capital account. They are already given in the question. On liability side, capital account Rajan and Selva 30,000, 16,000 rupees. So we have entered credit side. Capital account opening balance of the capital account always shows on credit side. So respectively by balance brought down 30,000 rupees, 60,000 rupees entered with their old partners. Okay. Then what are the items will be appear on capital account? Let's see the question. In the box balance sheet liability side, general reserve is a liability item. Okay. Capital account, capital item. General reserve is a capital account. So 44,000 rupees general reserve. We are going to distribute to their old partners capital to their old profit sharing ratio. 4,000 into 3 by 4. Okay. With to Rajan. Okay, 1 4 is 4. 1,000 into 3 equal to 3,000 goes to Rajan and Selva. General reserve amount is 4,000 into Selva's old profit sharing ratio is 1 by 4. Okay, 1 4 is 4,000 rupees. 1 into 1,000 are 1,000. So we distributed general reserve to their old partners capital account with their old profit sharing ratio. And then revaluation account, we have the profit on revaluation account immediately transferred to the old partners capital account. Who are the old partners? Rajan and Selva. We transferred the profit on revaluation account to their old partners capital account. So this also we are going to enter into the capital account. Okay. So why? Because the profit is transferred to the capital account, old partners capital account. So in capital account, on credit side, we are going to enter revaluation account 1575 to Rajan account and 525 goes to Selva account. Okay. Why it is comes on credit side? Because revaluation we find out the profit on revaluation account on debtor side. So what is the journal entry? Revaluation account debtor to old partners capital account, right? So old partners capital account is on credit side. So you go to credit side of the capital account, we are going to enter the opposite account, revaluation account. Okay. Then the new partner whose name is Ganesan, at the time of admission, Ganesan brings cash as a capital. Okay. So 10,000 rupees cash entered on Ganesan's column. Okay. Then asset side of the balance sheet in the question, they have given profit and loss 10,000 rupees. Okay. So if you see the profit and loss on asset side, it will be considered as the loss. Losses always enter on debit side of the capital account. We are going to distribute that loss 10,000 rupees to the old partners with their old profit sharing ratio. So 10,000 into 3 by 4 means 7,500. Okay. 10,000 into 1 by 4 means this is called quarter. Okay. 2,500 rupees were distributed to the 7,500, 2,500 to the respective partners capital account. Okay. So capital related transaction we entered here. Now we are going to find out the total. How can we find out the total? Which side we have the higher value, that side we are going to enter the total. So as per the format, credit side we have the higher value. So for that we are going to add the credit side. We will get 30,000 plus 3,000 plus 1,575. You will get 34,575. Then 16,000 plus 1,000, 17,525 and 10,000. The same total we are going to enter into the debit side in the same horizontal line we entered. Now we are going to find out the closing balance. Closing balancing figure. Okay. So listen carefully. If you have the opening balance on credit side, you will get the closing balance on debit side. Okay. So as per the format, we are going to find out the closing balance on debit side. Which side we have the higher value, that side we have the balancing figure. As per the format, debit side we have the lesser value. So we need to find out the balancing, closing balancing figure on debit side. Okay. So we have to subtract the total value 34,575 minus 795. 500 you will get 27,775. Then 17,525 minus 2,500 you will get 15,025. Then 10,000 there is no value, so 10,000 rupees entered here. Okay. So the closing balance value we find out. Immediately we are going to brought down to the opposite side and enter below the total the same value 27,075 and 15,025 and 10,000 rupees. Against this you are going to write by balance brought down, which means this is the opening balance of the next accounting period. This is the capital account for the respective three partners for the opening balance of the next accounting period. Okay. So we find out opening balance of the capital account for the next accounting period. So we prepared capital account. Now we are going to prepare the balance sheet. Okay. So balance sheet dated on, listen here, 31st March 2017. Okay. Okay, listen. So listen, as per the format of the balance sheet, there are two sides, asset sides and the liability side. Okay, always we started with the liability side, it will be easy for you. Okay, so on liability side you always started with the capital account. First item is you are going to write capital account on the liability side. Okay, who are the partners in the firm? There are three partners in the firm. Their name is Rajan, Selva and Ganesan. Their capital amount is 27,075 for Rajan and 15,025 for Selva and 10,000 for Ganesan. After added, you will get 52,100 rupees capital account value. Okay. Then, which are the items is related to liability? Say you are going to enter here. So, creditors given in the question 37,500 rupees we entered. Then comes to asset side of the balance sheet. As per the question, we are going to enter the asset side of the balance sheet. The first item is a building is given in the question on asset side of the balance sheet. Building 25,000 rupees. Okay. Listen here, the building value appreciated 5,000 rupees. Appreciation means we have to add the building value. 5,000 rupees is 25,000, you will get 30,000 rupees. Then furniture value, furniture is 10,000 rupees. 1,000 rupees entered from the question and we have the adjustment for furniture. 100 rupees depreciation. So depreciation 100 rupees means we have to subtract the depreciation 100 rupees. 1,000 minus 100 you will get 900 rupees. Okay. Then the next question in the stock item on the asset side 20,000 rupees. Stock 20,000 rupees and stock value depreciated 2,000 rupees. So we have to less depreciation 2,000 rupees. So from 20,000 you will get 18,000 rupees. Then debtors 16,000 rupees entered. Then doubtful debtors means loss. Okay. So loss means we have to subtract it. Doubtful debts 800 rupees from debtors, you will get 15,200 rupees. Then cash at bank 12,500 rupees entered. Ganesan brings 10,000 rupees the cash as a capital. We are going to add the Ganesan capital with the cash account because Ganesan bring cash in the name of capital. So cash will be added with the cash at bank 10,000 rupees plus 12,500. You will get 22,500 rupees. Okay. Then bills receivable 3,000 rupees will be entered on asset side of the balance sheet. Now we are going to add the asset side balance. Asset side value is 30,000 plus 900 plus 18,000 plus 15,200 plus 22,500 plus 3,000 you will get 89,600 rupees on asset side. Similarly, 52,100 plus 37,500 you will get 89,600 rupees on liability side. So listen here carefully. Asset and liability side we will get same equal value, that is 89,600 rupees. Okay. Do you have any doubt? Please comment it into the comment box. Thank you. Take care.